Good morning, ladies and gentlemen. Good morning and happy Friday. How you guys doing today? Hey, trading book and pencil. Good to see you in here. Morning, Erla. Pete, Ron, hello. Good to see you guys in here. How's everyone doing today? Steve Diego, long time no see. Good to see you in here. Muser, always nice seeing you. Got all the cool kids in here, right? Sad since you're a nerd. I think you'll find that we're all nerds in here in some capacity. Guys, before we do anything today, I wanted to share this with you. I wrote this up the other day, and I shared it yesterday, and I want to share it again today. Just expectations for the room, right? What you can expect and why I do things the way I do. And guys, this class is designed to teach you 3 rules on only 2 charts to give you the skill set to recognize advantages and then turn them into trades. Strong triggers, no termination conditions, and then finally a high probability trend trade entry. And once you can recognize, guys, can you hear me? Give me a Y if you can hear me. Cool. There we go. See if we can get Farak in here. And guys, I do this for a reason. We talk about these 3 rules, and it's not an accident the way it's done, and it's not at all coincidence that there's an easy way to do this and a difficult way. Because once you can recognize momentum, you're capable of seeing a market that's likely to continue in the direction of the trend, guys, and that's a huge advantage. And on its own, momentum is a powerful enough advantage to find trades in smaller sizes, quicker profits, just utilizing nothing more than momentum. And that's the reason that it's one of the first things that I teach. And then when you couple that momentum with the advantage of a clear path, not only are you working with a market that is capable of pushing, but there's also no key areas in the way to create a bounce, nothing in the way to ruin your fun. And if you picture a semi-truck doing 100 miles an hour down the highway, guys, that is the visual of what it means to have momentum and a clear path, and it's just hard to stop it. These 2 concepts are enough to create a trading plan that is consistent and profitable. So study them and learn them and commit to them, guys. And once the recognition is second nature, once you can see momentum, once you can identify that clear path, you're going to find your entry. But until you do, the high probability trend trade that we talk about in this first hour every day is a trade that embraces the advantages and has the potential to win 70 to 80% of the time. It's a trade that helps you recognize the advantages of momentum and the clear path by using the rules. And it's a trade that'll build confidence in those advantages, guys, through study. And the high probability trend trade is not your only trade. It's your first trade. And if you learn it, then the possibilities are really going to seem endless. So the first hour of every class is designed to teach you momentum, a clear path, and how to enter the highest probability trend trade that we teach. You will be given the tools to study. You're going to give pictures to create recognition, a solid plan to follow until you can develop your own plan, guys. I say it every day, and I promise you, I will give you everything that you need to be successful with this software in the first hour. Every tool that you need to have a trading plan that has been proven to win more than it loses, you're going to get in this first hour. And then the next 2 hours of class are devoted to your questions, pictures, and it's focused on helping you read the indicators. Guys, again, give me a Y if you can hear me. There we go. So we'll see if we can get Steve to reboot. So guys, we're going to take that next 2 hours, and it's 100%. John Novak, get out of my room. I always tell John, it's like, don't show up until after 10 because you're too damn important and people listen to you. Guys, the next 2 hours, we're going to focus on your questions. Nice job, John. We're going to focus on your pictures, and I'm going to focus heavily on just helping you read the indicators. Good morning, Kenan. so that you can make logical decisions on entries based on the information the indicators are giving you guys. And this is one of the most important things. Your participation is what's going to foster the learning, guys. It's important that you present your pictures in the classroom, but it's even more important that you tell me what you see. What is your chart read? And if it needs adjusting, we're going to work right in the moment. We're going to take every picture that you post, and if it needs to be turned into a lesson on chart reading, guys, we're going to do it right there in the moment. So everything that you present is an opportunity for growth. So the first hour is me, literally giving you everything that you need. But then the burden of work is put on you. You have to participate, guys. The people that post in the room, the people that ask questions, the people that are humble and say, you know what, I don't understand this in my first week. I'm brand new. I need some clarity. Guys, those are the people that get to where they want to be. So everything that we do is going to be about advantages. And the first advantage that we give ourselves is understanding when news releases are happening. Today at 8:30, if you were watching the S&P, I think Pete said it dropped 320 ticks in 10 seconds. It becomes untradeable. It's too fast to trade. So when you know when these news releases are, anything high impact, red boxes, anything medium impact, it gives you an advantage. It keeps you from jumping in front of that emotional freight train. And then everything that I talk about every day, guys, every day, you can find in the trading guide. And again, there are no secrets, none whatsoever. Every answer that you need is going to be in this trading guide. Every rule that I teach is in this trading guide. Even the spreadsheet that I give every day is in this trading guide. And we're going to focus on the high probability trend trade, guys, because this is a trade that is simple to learn. It's only 3 rules. The looks are very specific. And if you don't cloud yourself looking for other things, if you focus on finding the best things, you will learn it. You will learn it quickly. And the cool thing is that high probability trend trade, I want to show you in the glossary of common terms, is a trade where each indicator on every chart is going to agree with the trade, guys. This is the best of the best. You're going to have the strongest triggers, and there's going to be no termination conditions, nothing between your entry and your target. And the whole idea behind this trade, and the reason that I teach it every day, is that it's a trade that typically wins 70 to 80% of the time. That creates confidence through the memory of success, guys. And it turns you into a chart reader. And chart reading is about 90% of your day every day. And what you're doing is you're simply looking at your charts and you're saying, hey, do I have these advantages? Is that momentum present? Is my path clear? And if it is, let me find an entry, guys. And once you get good at your chart reading, once you begin to develop that skill, you're going to understand where the market is likely to continue. You're going to find entries at that point. You're going to understand where the market is likely to go, and that's going to help you build a management plan. And you will understand where the market is likely to stop through those termination conditions. And the cool thing is we're going to walk hand in hand through this today. We're going to talk about each of these advantages and being able to identify this. And we're going to do it with that simple high probability trend trade, those 3 rules on only 2 charts. So your path to getting where you want to be, ASAP, guys, it starts with posting in the room. This room is not designed to be a lecture so much as it is a conversation. Just a friendly reminder that everything that I teach in this room, I understand. My goal is that you understand it. So if you're having a challenge with anything that I talk about, if it doesn't make sense, if you need some clarity, if you need to see some examples, all you have to do is raise your hand. I don't have a time schedule. I can go as long or as short as I want to make sure that you guys get what you need. So post your pictures in the room, whether it's a trade, whether it's a question, it doesn't matter. And then use the spreadsheet that Nexgen gives you, and I'm going to give you today. Of course, I give it to you every day, because this spreadsheet, guys, is a trade journal first. The first tab is where you're going to put every trade that you take, whether it's a winner, a loser, whether it's break even. And the deal is you're not just going to post a picture in here, and there's the instructions on how to do it. You need to go back and you need to talk about what you saw. You need to talk about the advantages that were present. You need to talk about your entry, and you need to talk about why you exited. And the cool thing is that if you get in the habit of doing this, you're going to find yourself following rules. But more importantly, when you annotate these charts, you're going to come back to them tomorrow and you're going to read those annotations. So maybe you exited early. You need to talk about why you exited early. What was going on in your head? What were you feeling? And not only that, what could you have done to do it better? And the cool thing is that if you're not sure what you could have done to do it better, by presenting in the room, you and I are going to have a conversation. You're going to be able to fill up your notes section with the feedback that you receive, whether it's entry, whether it's exit. And guys, I have a blast doing this. So the more questions you ask, the more fun I get to have. But every morning you have to ask yourself what worked and what didn't work, and what felt easy and what felt forced. And this little study every morning is going to set you up for the day. It is going to accelerate the learning process. And it's a vital part of what we do, guys. Post in the room, ask for help. If you are on demo, ask for help. If you just went live, ask for help, guys. I don't care if you've been with me a day or 1,000 days. My goal every day is to help get you where you want to be. And I need you to present in the room. I need you to ask for help to make that happen. We're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. We're going to talk about the high probability trend trade. You guys simulate, practice. Don't wait until you think you're good at it to start trying. Just get in there and take trades that you see. Tell me what you saw. Because the cool thing is we can head off any potential problems at the pass. The quicker you start posting, we can start getting you focused on the advantages and what you should be looking for. And all that is you dropping them in the room. And of course, I don't want you practicing the wrong trades, guys. It's fun to get lucky because it inflates the ego. Hey, look at my simulated money. But the reality is getting lucky on the simulator is creating a muscle memory that's going to set you up for long-term failure. Whether it's fighting everything to go counter trend or jumping in early with unreasonable stops. We're going to mitigate that. We're going to look at it. We're going to recognize patterns in you, and we're going to work together to fix those. We're going to simplify heavily today. I'm going to focus almost exclusively on that high probability trend trade and the 3 advantages associated with it. And you've got to understand what it looks like. So there's a couple ways that we do that, and it goes back to the spreadsheet. There's a 101 tab, and that 101 tab is really in green. It's the rules for the high probability trend trade being met individually so that you can recognize that momentum, so that you can identify that clear path, and so that you can pick out the point where the market is most likely to continue. I'm a huge fan in understanding both sides of the coin. So the red sections are what it looks like when your rules aren't met. So not only will you be able to identify advantages, but you're going to get this clear-cut picture of what it looks like when you should be pausing, sitting on your hands, not taking that trade. So that is one of the best ways to create recognition. I'm going to hand you a solid plan that optimizes your chances of success. And then you're going to create your own plan ultimately through pictures, through patterns, through things that you see that become easy to you. That's what the 3rd tab is for. And then finally, guys, repetition creates recognition. On the final tab, it's the client trades. This is where I just steal pictures from you guys when you do great things. But there's almost 400 pictures of Nexgen clients using these advantages, taking them and creating profits with them, guys. And this is a great way to study, because what this does for you is it creates, and I love this phrase, and it's probably not even a good one, it creates recognition. It creates recognition through repetition. And I'm telling you right now, there was this thing where they were interviewing brand new NFL quarterbacks, and all these rookie quarterbacks were saying, holy smokes, the NFL is so fast. It's like it's in fast forward motion all the time. And then the interviewer pans over to Tom Brady, who's been in the league for 20 years, and Tom's like, yeah, it's pretty much slow motion at this point. I've seen everything so many times that it's almost as if the playing field has slowed down. And guys, that's what taking all these pictures does for you. When you see your rules being met with no fear of winning or losing, it's just a picture doing nothing of a great advantage, it literally slows down the market for you. So you've got to learn those looks so they become easy. And the easiest way to learn those looks, guys, is keep it simple. Focus on three things. Pete, you took your simulated millions and your simulated hot girlfriend, you got a simulated Ferrari to your simulated Learjet, and did some simulating skiing in Aspen. Amen. Best dream ever, right? And you keep trading the way you're trading, pretty soon you'll be doing that in real life too. So guys, this high probability trend trade is 3 rules. Each rule creates an advantage. And I'm going to tell you right now, once you can identify the advantage of momentum through strong triggers, rule number 1, and you can identify a clear path because there's nothing in the way, guys, this is going to set you up for a million ways to make money. And these are probably the 2 most important. Once you have them, initially you're going to define your entry area for the highest probability trend trade. But I'm going to say it about 100 times today. You will find entries beyond this high probability trend trade. This is not your only trade. This is your first trade. You're creating a foundation and you're learning to read indicators, because these 3 rules happen on 2 charts, and that's all you need. There's a large chart, and guys, it's the most current bar. The first bar on the large chart is going to define the direction of the market, whether it's going up or down, which direction you should be trading. It is going to define the momentum of the market, whether or not you have that advantage, and it's going to define key areas on the market and letting you know if you have that clear path. Rules 1 and 2 are met on this very broad stroke of a brush, this slow moving chart on the very first bar. When the rules are met, you're going to turn to a smaller chart, a faster chart. This is your refinement chart, guys. And this is going to take that 1 bar, and inside of that 1 bar, you're going to have 20 to 30 bars on this small chart, and you will be able to pinpoint exactly where the market is most likely to continue. Hey, good morning, Steve Diego. Let's celebrate the fact that you got a new computer. I'll take a few glitches with a new computer every day. It's like trying to figure out how to release the trunk on a brand new car. You still got a new car. And guys, rule number 3 initially for you is going to be the entry for the highest probability trend trade, pinpointing exactly where the market is most likely to continue. And we use these 2 charts, and my brother put together this picture. I think it's great. Reminding you that you're not in charge. Reminding you that the market doesn't care what you want. That you, in your smaller individual trader state, you're not going to affect the market one bit. So you can make a choice. You can go with the large crowd, which is the large chart. These are the people, the men and women who have the money to create trends. These are the people that establish momentum. And these are the exact same people that are reacting to those key areas on your large chart. And when you go with these guys, it removes the burden of opinion. It really does. They say up, they say fast, they say clear path. I'm just going to go with them. And then there's always the small crowd. And guys, the small crowd still has 1,000 times more money than you. They have enough money to create little ripple effects, right? Little pushes against everything that the large crowd wants. But these guys fail typically 70 to 80% of the time. And you're going to use rule number 3 on that small chart to pinpoint exactly where they're most likely to fail. This is going to become your entry for the highest probability trend trade. This is going to be your entry so that you can go with everything that the large crowd wants. So we're going to go through each rule individually. We're going to talk about how to study it. I'm going to give you a very clear page of homework that you should probably do a little bit of this weekend if you want to get good at this. But we're going to start everything with strong triggers, guys. You're going to find that almost everything that we do in the high probability trend trade somehow revolves around trigger lines. And there are 2 trigger lines. There's a small trigger and a large trigger, guys. The large trigger is dashed. The small trigger is solid. Your small trigger is a fast moving average. Your large trigger is a slow moving average. If they're red, they're going down. If the background is red, the market's going down. If the triggers are green, if the background is green, it's going up. So your first and probably easiest lesson is red is down and green is up. Go with the flow, right? And these trigger lines are going to work together to define momentum. And they do that through rule number 1, strong trigger lines. So in order to have strong trigger lines on the large chart, really on any chart, but we're looking for it on the large chart, if the background is green and the market's going up, your large triggers and your small triggers must also be green. It's the only way that you'll ever have rule number 1 met. And then there's the small triggers above the large triggers, the separation between the two. I like to tell you guys, picture scissors that are open. And when the scissors are open, you can cut, you can get some work done. And it's that separation between the small and the large that let me know that the odds are favorable for the market to continue up. Morgan, you can try right-clicking and reloading your template. That usually works. Or reload historical data. That typically works as well. And then guys, when you have this separation, when everything is green, when everything is up, when the triggers are wide, the odds are favorable for the market to continue up. And you're going to hear in this room all day long, odds favorable momentum. Did you have odds favorable momentum? Was odds favorable momentum in effect? You're going to see it annotated on charts OFM. Guys, odds favorable momentum is what pushes that market. In a downtrend, everything has to be red. Smalls have to be below the large. Everything is wide and angled down, and those scissors open. That separation lets me know that the odds are favorable for the market to continue down. This is your first advantage. And odds favorable momentum pushes the market, guys. And odds favorable momentum can break those key areas. And odds favorable momentum will even cover some of the mistakes that we tend to make as new users. This is the one that you could literally build a trading plan that revolves only around momentum if you felt so inclined. But we're just using it as 1/3 of the equation. And when I have strong triggers up, this is the best time to buy Fibonacci support on that smaller, faster chart, that refinement chart. On your large chart, it's going to look like a tail. On that small chart, it's going to look like that entire shove back from the small crowd. And you're going to be able to pinpoint exactly where these tails are most likely to form. And that becomes your entry for the highest probability trend trade. But strength diminishes, guys. If this is strong triggers, when the small triggers return to the large triggers, when the scissors close, this is a weakening of the large triggers. And when I weaken the large triggers, anything can happen up or down. Guys, I think that words have power. I really do. And if you're looking to take a trade, do you want odds favorable momentum? Or do you want to feel like anything can happen? And you've got to commit to that odds favorable in the beginning, because it turns out to be a wonderful advantage. And if I open up a large chart, odds favorable momentum heading to the upside, sure enough it continues up. Odds favorable down, it's not difficult to recognize. In the most current bar, smalls are above the large are wide. In the moment right now, guys, we have odds favorable momentum to the upside. And you can scroll back. That was a huge just push down. But you see strong triggers, and down it goes, right to Fibonacci support. And strong triggers, and up it goes, right to Fibonacci resistance. And you can literally scroll back and just begin to commit this look to memory, guys. And one of the easiest ways to do that is to open up your capture software, open up your Snagit, whatever you're using to take pictures. Let me figure out where the heck mine went. And you don't have to be in a trade to learn this lesson. You don't have to have anything at risk. But you can literally take one picture and draw an arrow to those strong triggers and write out the process of how you found them, right? Smalls below large, all red, space between, and this is momentum. And this is rule number 1 met. And guys, if you go back and take 25 pictures of those strong triggers, you're never going to wonder if you have strong triggers in the moment. And then you can do the same thing here. Smalls inside of the large. And that's weakness. And rule 1, not met. Anything can happen. And sure enough, there's a reversal, right? Right with those weak triggers, right at Fibonacci support. And guys, this one picture, go to your spreadsheet, go to the 101 tab, and you can define strength and drop it in the strong triggers section. And this is the same one that I gave you, and we're 43 pictures deep on strong triggers for you guys that are just learning the look. And then that exact same picture, one picture, no trade, just a little annotation and a look. I've also defined weakness. Both sides of the coin, strong and weak, guys. And you've got to learn these so that they become easy. So Is everybody cool with that? Strong triggers leads the way. Separation, scissors open. Rule number 1 is met, guys. Momentum is really the best of the best. And then once you have it, you got to make sure that there's nothing in the way. And this is one of the most ignored rules, because it keeps you out of trades. It keeps you out of trades when the advantages aren't present, which means that you have to be patient. But termination conditions false. No areas on the large chart that may reverse the market. This is going to give you room to profit targets, and this means that you have a clear path. This is rule number 2. The areas that we're looking for on the large chart, guys, and I like to share this picture every day. I'll drop it in the room for you. There's divergence high lines and divergence low lines, guys. Divergence is a loss of momentum. So if the market is pushing up and then heads down, if there's a loss of momentum, if momentum doesn't follow price, you're going to see a magenta line from a high, and you're going to see a cyan line from a low. We're also looking for Fibonacci resistance, which is a red line, and when the market is trending up, this is a point where the market may stop, it may bounce, where decisions are being made by that large crowd. And Fibonacci support, the blue lines, guys, when the market is trending down, once again, this is where decisions are being made by the people who control the market. And you know exactly where these lines are, exactly the same way they know where this number is. And these are areas that may stop the market. They may create an untradeable bounce, or they may reverse the market completely. And then we're also looking for these yellow 1-to-1s. When market's trending up, they behave as resistance. When it's coming down, they behave as support. These are all areas on a large chart, but I don't want you to rank them. I don't want you to make one stronger than the other. Lines on the large chart are where decisions are made by the large crowd. So we're going to use the trigger lines to determine whether or not they're likely to hold, if they have the potential to break, or if they've already broken. And the first thing that has to happen is price must reach the area. And when I say price reaches the area, these dynamic Renko bars come up and hit a fib. They hit a yellow 1-to-1. They smack into a magenta divergence high. And the only thing that you have to do is ask yourself, where are my triggers? And if your triggers remain below the area of resistance, this area of resistance may stop the market. And if price trends down and reaches Fibonacci support, or one of those divergence lows, or even yellow 1-to-1s, all you have to do is ask yourself, where are my triggers? And if the triggers remain above support, this is an area that may reverse the market, guys. Rule number 2 is not met. No trades into the area. That's it. The rules aren't met, no trades. Because these key areas are where buyers are buying and sellers are selling and fights are happening. And guys, the easiest trades that you'll ever take are in between the areas when the path is clear. So if you reach an area, almost every line is going to be a termination condition, at least for a moment. But if the small triggers and the large triggers get to the other side of support, if the small triggers and the large triggers get to the other side of resistance, well, then the area is broken, and you'll see that support begins to behave as resistance, and resistance begins to behave as support, guys. And this is your clear path. This is when rule number 2 is met. This is when you're looking for that momentum, and you're looking to pinpoint exactly where the market is most likely to continue. So for the brand new user, you either have a termination or you have a clear path. Let it be that black and white in the beginning. And what you'll see, once again, if you open up a large chart, Fibonacci support stops the market to the tick. The triggers don't break, and there was no reason to trade into it. And if you were short, well, then you had everything that you needed to know to get paid at that blue line. The same thing has happened here. Support to the tick, and look at the bounce. Weak triggers, the reversal. Support broke, and it behaved as resistance to get you to the next area. And if you just scroll back, you'll begin to recognize the power of these key Fibonacci areas. You'll begin to recognize how often they hold, how often they stop the market, how often the market reverses at these key areas. And what you're doing is you're developing trust in the idea that you don't have to trade into these areas to get paid. You don't have to hope that an area breaks. You can simply let it break and then look for your rules to be met. And once you're good at these two concepts, broken or not, termination or clear path, it sets you up for the medium probability trade, the next trade in your trading plan. And your ability to read charts and recognize momentum, your ability to understand the trigger location versus the areas is going to let you know when these areas have the potential to break. And it's what we call a 50-50 look. And it's not 50-50 because that's your chance of survival, guys. It's 50-50 because 50% of your triggers, the small, will absolutely smash through an area with odds favorable momentum, but 50% of your triggers are lagging behind. They haven't cleared it yet. So what this look tells me is that blue fib has the potential to break. That this look tells me here is that this red fib has the potential to break. But since it's only potential, rule number 2 isn't met. Since it's only potential, you do not have a clear path. And guys, this is going to be the majority of your trend trades. Looking at a look where the areas have the potential to break. I'm going to give you a rock solid plan to be able to capitalize on this look, to do it with the highest probability of success. And this will be your second trade. And these medium probability trades are going to be the majority of what you do every day. So it's important that you insist on momentum. It's important that you let trigger lines smash. And once you can do this, guys, that's 2 trades setting you up for success. And the best of the best trades, the highest probability trades, the best chance of success trades will typically come from what we call a strong top or a strong bottom. But if you skip the lesson on termination conditions, you're going to have difficulty recognizing this phenomenon. Every strong top or bottom begins life as a termination condition where the triggers don't break the area. So the buyers are in control. The market is pushing up. Maybe you're in a long position, maybe you're hoping for a trade, and then it reaches Fibonacci resistance and the triggers remain below. And your adherence to rules kicks in. And you say to yourself, okay, no more long trades, we've reached an area that may stop the market. And if this termination condition with absolutely no triggers through makes those large triggers roll from green to red, that reversal dictates that it's now a strong top, that the decisions made at resistance were so impactful, they were so decisive, that not only did the market stop cold, but it also reversed. And guys, any rules met trade on the other side of that has a higher chance of success. So the sellers are in control. They're pushing down. Maybe you guys took profits here at Fibonacci support and you said it's a termination condition, no more short trades. Well, when those large triggers roll from red to green, guys, now it's a strong bottom, and any trade going the other direction has a higher chance of success because the decisions made at a key Fibonacci area were so impactful that they reversed the market. So strongs, tops, and bottoms, guys, man, it's such a great advantage. It's not mandatory, but it's going to increase the likelihood of success. So is everybody good? Give me a Y in the room if you're with me. I love a little feedback from you guys. If price reaches an area and the triggers don't break, it's okay to do nothing. It's all right to sit on your hands, guys. And then once the small break through but the large haven't, these areas have the potential to break, but they're not broken. But once small and large get below support, support behaves as resistance. And guys, that clear path is present until you reach the next area. And that's kind of the basis, guys. Once you know momentum, once you can identify a clear path, you've got everything you need to create an awesome trading plan. So lines on the large chart can create trouble. Focus on these concepts. And then I'm going to take you to one more termination condition. So you may have odds favorable momentum. The path might be clear, and you turn your attention to that smaller, faster chart, and you say, it's time to look for an entry. It's time to pinpoint. Well, this is a termination condition that you're going to see on the small chart first, on that faster chart. And it's going to help you identify change that you can't see on that slower moving chart. 3 divergences in the same price range may terminate the trend. 3 cyan lines from a low, 3 magenta lines from a high. And what this is your small chart telling you that there's 3 losses of momentum, that things may be changing. And it becomes more powerful with those anything can happen triggers. So that lesson from rule number 1 is going to carry over. And you're going to use that lesson to identify weakness. And you're going to be able to say to yourself, whoop, 3 divergences, no more short trades. My path is no longer clear. 3 divergences from a high. I'm not going to take that trade. And guys, you're going to see these looks on the small chart, even when it looks like the rules are met on the large chart. Your small chart will literally tell you that things are changing. And it becomes even more powerful if it creates what we call a head and shoulders pattern. And I'm not going to lie, guys, I didn't know what a head and shoulders pattern was until I learned about this termination condition. When that third pivot is higher than the previous from a low, this is your head, these are your shoulders. And that third pivot is lower than the previous from a high, this becomes your head, these are your shoulders. That's a very powerful pattern, guys. And one thing that I want you to notice, it may terminate the trend. It might just create a little shove back. Everything that we talk about is may, is potential, is could, because these are nothing more than patterns. Patterns that repeat themselves every day. Patterns that give you an advantage when they're not present, and take away your advantage when they are. So with that said, I'm going to remind you guys that 90% of your day is going to be spent reading your charts. And there's a lot of waiting. You're professional waiters, guys. 90% of your day is waiting for that advantage of momentum. 90% of your day is waiting to couple it with a clear path. And what you'll notice is that if you insist from day 1 to rule adherence, if you insist on day 1 on momentum and a clear path, it's going to keep you out of the market a lot. But it's going to save you from losers, where you begin to form opinions, where you start saying, well, the market should go up, even though your rules say there is no trade. And guys, it'll keep you out of consolidation, and it'll keep you from trading into areas that may reverse, and it'll keep you from hoping the market goes up or down when the momentum doesn't suggest that that's the highest chance. So focus heavily on your rules, guys. And the difference between the traders that I meet that are successful and the traders that are not is typically the ability to do absolutely nothing when there's nothing to do. And I'm telling you right now, the chart reads aren't difficult. Understanding momentum isn't a daunting task. Recognizing termination conditions won't take you long at all if you stay focused. But learning to trust them, learning to respect them, insisting that you do absolutely nothing when they're not present, that's going to be the skill that typically takes the most to develop. But once you have momentum, once you have a clear path, once the large crowd has told you what they want to have happen, we're going to let the small crowd come in. We're going to let that fight start, guys. And rule number 3 on that smaller, faster chart says that you're going to use a limit order, which means you'll literally wait for the market to come back to you. And you're going to use that limit order to buy or sell a pullback, that little fight that the small crowd creates, and you're going to have that pullback, that entry at areas, fibs, mid bands, yellow 1-to-1s, inside of triggers. And the language becomes very important as you begin finding these entries. And I'm going to talk about why it is. But I want to show you that refinement process, guys. In one chart, one bar on the large chart, direction is defined. The market is going down. And that one bar on the large chart, momentum is defined. You have strong triggers. And on that one bar on the large chart, this area had the potential to break because of that momentum. On your small chart, beginning at the bottom of that bar, when you make the decision that it's time to take a trade, this is where the fight starts. And that fight pushes all the way up. But notice absolutely nothing changes on that large chart. This tail on the large chart happens to be resistance inside of triggers on the small chart. You guys are going to pinpoint exactly where that tail is most likely to form. And the market's going to push all the way down. And this is about a 20 tick push. But we're still inside of that one bar. We still have odds favorable. We still have the path that we're looking for. So guys, it's this refinement process. It's this X-ray that's going to allow you to reduce your risk. And it's really going to allow you to maximize your profit potential. And the whole idea behind entries is that price corrects to the large triggers. Price returns to the large triggers, guys. I don't care if it's a large chart or a small chart, if it's a range chart or a week chart or a year chart. price returns to those large triggers. It's just a pattern that repeats itself. So on the large chart, you'll see price pull away from the large triggers, and then it typically pulls right back to it. On the small chart, the same thing is true. So in order to get the most accuracy, the highest probability entries, the large chart triggers have been placed on the small chart. So on your small chart, it's going to look like you have two sets of large triggers. The large triggers, the smooth, are native to the 5-1. You'll use those to establish momentum the same way you would on the large chart. And then the synthetic triggers, these step triggers, are nothing more than the large triggers from the large chart. So guys, these trigger lines are a correction point. This is where we expect the price bars to return to. And when we overlap those two correction points, when they become one correction point, you're going to have the most accuracy. You're going to have the least amount of risk. You're going to have the highest chance of success, guys. So when these are overlapping, one on top of the other, like two snakes riding piggyback, you have the least amount of space to put fibs, mid-bands, or yellow one-to-ones inside of them. The trigger lines aren't where we expect the market to continue. We use these very solid Fibonacci-based indicators, giving the market a place to bounce, guys. And identifying where the market is most likely to continue is exactly what rule number 3 does. So when the large chart says up, when the large chart has strength, when the large chart has absolutely nothing in the way, I'm going to take a picture of a picture here so that we can vandalize it a little bit. You guys are going to wait for the reversal bar. And this reversal bar, this down bar, after all of those up bars, when you're fearful that you're missing out, when you're worried that the market is going without you, when you're concerned that you're not going to get paid, this reversal bar signals the beginning of the pullback, that fight from the small crowd. The reversal bar is not your entry. This is signifying that loss of momentum that hopefully takes you back to your areas inside of favorable large triggers. Once you get the reversal bar, you're going to identify your favorable large triggers, large and synthetic, one on top of the other. And guys, inside of those triggers, and this is such an important key word to really embrace, the areas inside of the favorable large triggers are where the market are most likely to bounce, where that trend is most likely to continue. And you're going to create what we call a window of opportunity. And that window of opportunity is going to extend from the highest point of support, this mid-band, to the lowest point of support, those yellow one-to-ones. And this shaded box is the point where the market is most likely to continue. The shaded box is exactly where we expect it to continue back up. And I want you to remember that the large chart had odds favorable momentum, and the large chart had a clear path. So guys, you're going to place your limit order. You're going to right click on your chart and you're going to place a limit order, a tick or two above that mid-band, that highest point of support. And you are going to hope and pray that that small crowd has it in them to get you to your best of the best entry. So your entry is at the highest point, closest to price, because the reality is with these advantages, we don't expect it to go that low. But the reality is it could. So you guys have defined not only exactly where you want to enter the market, but how far you're willing to let that market go before your advantages are gone. And this window of opportunity, guys, once you can define that window of opportunity, you know where the market shouldn't go. Any areas beyond the correction point, beyond those trigger lines, guys, that's not your trade. The market's already exceeded what we expect it to do, what the patterns say that it does more often than it doesn't. And guys, once you can define where the market is likely to continue, well, then you can also define where the market shouldn't go. So you wait for the reversal bar, and that's not your entry, guys. It's just the signal to look for those triggers. And you find the triggers, and when price hits them, that's not your entry. You're looking for the areas inside. And guys, this particular short trade has one line inside of favorable large triggers. And if you write on your chart, every time you look for a high probability trend trade, area inside of favorable large triggers, it's gonna buy you some patience, and you're gonna learn to look for this very specific idea, and you're just gonna activate a limit order 2 or 3 ticks below that mid band. And you're gonna say, come get me, small crowd. And if they do, you're in a trade with every advantage that you could ever hope for. You pinpointed where the market was most likely to continue. You've learned to ignore the areas beyond the triggers. They're not a part of the window. We don't want the market to go up there. And your ability to pinpoint entries is what's going to allow you to place your first stop, your initial stop. Guys, you're going to put a protective stop beyond those triggers, typically 4 or 5 ticks beyond the trigger lines, beyond the correction point. Use that language, the correction point. And if the small crowd can push past the areas inside of favorable large triggers, if they can make that market go beyond those trigger lines, you don't want to be in the trade anymore. And guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. You're going to have a catcher's mitt right there waiting for it, and you will exit your position with a loss 20 to 30% of the time. This is a cost of doing business. Losing a trade is a normal part of a positive equity curve, but the key is let's lose the correct trades. Let's lose the trades with all the advantages. And if you take a loser and you say, man, I had momentum and my path was absolutely clear and I entered exactly where the market was most likely to continue, you're literally going to get to a point where you're okay with this. You're going to force the market to come get you, but it's key that you're taking the correct entries. It's key that those advantages are present. And then more often than not, you're going to get a reversal bar in the direction of your trade, guys, and you can reduce risk even further because now the market is doing everything the market said it was going to do. And when it starts going down, you're going to put your stop 2 ticks above that reversal bar. When it starts going up, you're going to put your stop 2 ticks below that reversal bar. And it's not at all uncommon to see you guys take these beautiful entries at areas inside of favorable large triggers to move your stop behind a reversal bar. And the trade still happens to be one of those 20 to 30%, but you're only giving away $30 or $40 in the loss. You're not putting your stop way out here in the distance, hoping that the market reverses, not from areas, from beyond that correction point. And guys, these tiny little losses are one of the reasons why you can go through life and you can win, 40 or 50% of your trades, but still come out on top because you're managing risk. And all you really have to do is learn how to find this entry. You've got to go through and be able to identify momentum, guys. And if you're unable to identify momentum, if you're not good at that, well, then your job is to raise your hand and say, hey, Mark, let's go over momentum for a little bit. I want to make sure I have this concept. And you've got to understand that when price hasn't reached the area, guys, you have room to your target. And when the rules are met, you can scroll back historically and circle these tails. If they line up with areas inside of favorable large triggers, you have a high probability trend trade. And it's your job to go back and start putting those pictures into your favorite looks, to compare them with the client trades to make sure that they're right. And then you've also got all those trades to study, and these are from the spreadsheet, guys. Odds favorable, the path is clear, and sure enough, the market pulls right back to support inside of favorable large triggers. Off it goes to the promised land. Even going down, odds favorable, clear path, right to resistance inside of favorable large triggers. This is the pattern. This is what you're committing to memory. This is what, once you learn this look with absolutely nothing moving, it becomes easy to catch it in the moment, guys. And that's the high probability trend trade. That's what we talk about for the first hour every day. That's exactly what we're looking for. And right now in my large chart, my trend is up. My large trigger is green. My small trigger is red. Guys, do you see how I don't have any momentum to the upside because the colors don't match? I don't have a clear path to the upside because price reached resistance and all the triggers are below. And right now, my only option is to sit on my hands and do absolutely nothing because I don't have the advantages I need. I don't have momentum or a clear path. So I won't even look at my small chart yet. And guys, you've got to be able to go through and recognize these pretty quick. The easiest way to do it, and at the risk of sounding butthurt, the most ignored tool is this Chart Reading 101, and I give it every day. And Chart Reading 101 is designed to make you a chart reader. It's designed to get it so that you can recognize these advantages quickly, so that you can make decisions rapidly, guys. And if you take 25 pictures each, strong triggers and weak triggers, clear path and termination conditions, 50-50 look, and then 20 each of those entries, guys. This is 245 pictures. This is 5 or 6 hours worth of work for you guys, but I'm telling you right now, if you go through this process, you're never going to make a mistake on momentum. If you go through this process, you're never going to say, man, I thought my path was clear. You're going to commit it to memory, because what you're going to do is you're not just going to take the picture, you're going to annotate the picture. You're going to take the time to type it out, to say exactly what the recipe for strong triggers is, exactly what rule it relates to, what the advantage is. And if you do that for each and every one of these pictures, if you fill out that one-on-one spreadsheet, guys, you're not going to have any struggles with momentum. You're going to understand it clearly. You're not going to hope that it's a clear path. You're going to know very decisively that it's a clear path. And the same is true with termination conditions. So, guys, I can't make you do this, but if you really want to be a chart reader, which is going to make you a day trader, don't skip this exercise. Go through, do 5 a day if it seems overwhelming. And then I'm also going to give you the high probability trend trade checklist, guys. The first page are the rules for entry. It's a checklist. It's actually 4 checklists. Print this out. Make 10 copies. Drop it on your desktop. Take your most delicious crayon and make sure that you can mark yes to each of these before you take a trade. Use the exact same language as you describe the conditions on your chart. Odds, favorable, momentum. No terminations. And guys, this is the one right here. Area inside of favorable large triggers. Commit to associating language with the look. Put them together so that you can follow your rules. I've never had anybody mark yes to each and every one of these, truthfully, and do worse than 70% of their day trading. But as you're learning them, as you're starting to commit these to memory, guys, the second page is exactly what it looks like to have the rules met. There's your strong bottom. There's your momentum, weak triggers, anything can happen, guys. No reason to confuse the two. There's your termination. There's your potential to break. There's your broken. And here's your window of opportunity, all the way down to telling you exactly where your limit order goes to enter this trade. So use this as you're taking those pictures to make sure that you're taking the right pictures. And then finally, the KISS plan, guys. I give this out every day. And this is a stepping stone in your learning journey. This is not your only trade. This is your first trade. And this plan is designed to optimize your chances of success with the high probability trend trade. That's all it is. It's creating a foundation so that you can build your own plan initially or eventually. And it's going to be through simulation, through study, through class feedback, and continuous practice. You'll ultimately create your own plan. And I'm going to tell you right now, guys, your own plan is probably going to revolve around momentum and a clear path. And you're going to find a million ways to get it, to get that entry. But in the beginning, keep it simple, keep it focused. If you're coming back to me, and I see names in the room that I know have been with me for a while. Maybe you're not as consistent as you want to be. Maybe you find yourself embracing your chart read rather than your rules. Guys, coming back to this KISS plan has been proven time and time again to, I almost said pull your head out of your ass, and I guess that's kind of it, to refocus you on embracing advantages rather than chasing the money. And I'm telling you right now, everybody typically needs a little kick in the butt now and then to refocus. And guys, I've had people pass those prop firms in their first 30 days with Nexgen, keeping it this simple, focusing on the high probability trend trades first, learning to read their indicators before they try to chase all the money. And the people that are chasing the money rather than the process tend to struggle. True story. So your simple plan for consistency, guys, it starts with don't fight the large chart. Don't fight large chart momentum. Don't fight large chart termination conditions, guys. Don't fight the large chart trend. The large chart tells you exactly what the large crowd wants. The large chart tells you exactly which way you should be trading, whether or not you have momentum, and if there's anything in the way. Embrace it, believe it, learn to trust it. And the easiest way to commit financial suicide is trading against strong triggers and trading into termination conditions, guys. Seek help immediately. And you're going to define your entry. And I want it to be your entry. Don't let it be Nexgen's high probability trend trade. Force it to be Zahir's high probability trend trade. This is Morgan's high probability trend trade. This is Daryl's and Richard's and Jim's. And guys, own it. Make it yours. Commit to your rules. And then once you can define where the market is most likely to continue, you've got to do something with that great entry. You've got to manage it. And the same way your entry is mechanical, the same way your entry is very decisive on what has to happen to get you to pull the trigger, your management should be just as black and white in the beginning. Because I'm going to tell you right now, management is terrifying when you go live for the first time, because now you have something to lose. So if you develop habits on simulator, if you keep it very mechanical, it has to hit this or I get taken out, what happens is you learn to trust your charts and you learn to sit through the fluctuations. And guys, your initial management plan is very, very mechanical, but you will create your own with a little bit of experience. But it's based 100% on your ability to get in where the market is most likely to continue. Because once you can define that point, you know where the market shouldn't go. And your initial stop is where the market shouldn't go. And you're going to say to yourself, they're either going to stop me out or they're going to give me that reversal bar in the direction of my trade. And if they give you the reversal bar, you'll reduce your risk 2 ticks above it. And you're going to say to yourself, all right, there's nothing for me to do. I'm either going to take a small loss on this high probability trade. I have all the advantages and it's even going that direction. Or it's going to hit your first target, guys. And your first target in the KISS plan is 100% designed to get you paid. It is 100% designed to get money in the account, to create that confidence, to dry your sweaty palms. And it's only $100 away from your entry, guys. And if you're a crude oil trader, very often you're going to hit that $100 on the same reversal bar that has you reducing risk. And once you're paid, it feels good. The confidence is there. And guys, with all that momentum and a clear path, it's hard not to hit $100. You're going to move your stop to break even. And this isn't the best stop, and you'll create a plan based on your ability reading the indicators. But what break even does for you is it gives you the courage to hold for the second target. And you're going to say to yourself, I'm either going to get stopped out break even. It doesn't hurt to get stopped out break even, not even a little bit. Or it's going to go to my second target. And in the KISS plan, this most basic plan designed to get you paid and create confidence, the second target is only $200 from your entry, which means you're exiting your position. You have $300 in your account, and it doesn't matter what happens next, guys. Getting paid is the goal. The only reason any of us are in this room trying to learn to be day traders is because we want to make money. Make your money, and I promise you, if you go through the process of learning to read your indicators, you're going to find the next trade when it sets up. Get the money in the bank, guys. And this is the best of the best. This is the absolute highest probability way to optimize your chances of success. Learn to read your indicators. Learn to trust your indicators. Learn your ins and outs 100%, and that'll take you to one of those 50-50 trades. That'll be your second trade, and this is on the plan, guys. And this is designed to optimize your chances of success with the 50-50. So if the path isn't clear, if I don't have that advantage of a clear path, I want to come from a strong top or bottom. I'm insisting that I have momentum on both my large and my small chart, and I refuse to forfeit any momentum at all, which means that I can't have divergence on the small chart. I can't have divergence on the 5-1. And if I'm marking yes to all of these, I'm going to get in at the area, the same way of a high probability trend trade. But here's the deal. There's your second reference. Divergence, no trade. And guys, when you get to management, if divergence prints, exit the trade. Divergence is the #1 killer of these 50-50 trades. Not having the best of the best momentum is a surefire way for that area to not break. And I'm telling you right now, your initial plan for 50-50s should be absolutely no divergence. And eventually, through simulation, study, class feedback, and continuous practice, you may adjust that. But in the beginning, while you're building confidence Insist on that no divergence. Worst thing to see in the middle of a trade. Well, it depends on the trade, trading book. If I'm in a high probability trend trade, I couldn't care less about one divergence. Hell, two divergences doesn't even freak me out. If it's a high probability trend trade, because my large chart is screaming one direction with nothing in the way. And guys, and that's I'm glad that you put that in there, because that takes me to another concept that I want to share with you guys. One of the things that you have to do, see, you're creating rules, trading books. You're creating rules that are going to keep you out of winners. And I'm telling you that right now. You're creating rules that will absolutely keep you out of winners. Because if my large chart says up with strength, these small triggers almost have to turn against me. That's the only way I'm going to get down to the area inside of favorable large triggers, is if these triggers turn against me. And if my large chart says up, and my large chart says strength, and my large chart says that there's nothing in the way, I'm going to tell you right now, just absolutely without hesitation, let me find a picture, that one divergence isn't problematic for me with this look. Weak triggered, or like smalls against me, isn't problematic for me with this look. Because holy crap, look at the advantages here, right? So don't let these insignificant fluctuations on a smaller, faster chart talk you out of beautiful trades. And that's bringing me to this right here. You have to know, guys, you have to know what kind of trade you're in so you know how to manage it. You have to know exactly why you're going to enter, and you have to know exactly why you're going to exit. And I had the best conversation with someone yesterday. We focused so heavily on entries in the beginning, finding the best of the best spot, that a lot of people go into trading live, trading these prop firms without an exit plan. Guys, you've got to know what it's going to take to exit that trade. And then you've got to commit to having the rules met, because rules create a statistical advantage. And your process yields the results, guys. It is being able to do the same thing every day, having those advantages every trade, guys. And once you trust your rules, the emotion goes away. But if you're in a high probability trend trade, there's a very clear list of things that may cause you to exit. And if you're in a 50-50 trade, that's a different list. In Trading Book, that's kind of where I'm going with this one. Divergence on a 50-50 is a deal breaker. One divergence on a high probability doesn't even mess with me. And if I'm in a momentum trade, divergence might be a deal breaker, right? But if I'm in an HVA trade, well, I'm not really worried about it, because it's a different set of conditions. And guys, this is why we focus on one thing first, getting really good at one thing, so you don't give yourself too much stuff to think about. In Trading Book, you did what most people do, is they begin to create more and more rules where they're not necessary because they think it's a safeguard. But sometimes they appear even 13-2 strong triggers on 13-2. Show me a picture, because we may be talking about something else. But guys, I'm gonna absolutely drop a million things in the room for you right now. I'm going to give you the chart reading 101. I'm going to give you the exit conditions. I'm going to give you the high probability trend trade checklist. I'm going to give you my spreadsheet, and I'm going to give you the PowerPoint that I use to teach every day. And I'm going to drop every one of those into the room right now. And when I tell you every morning that I'm going to give you everything that you need, everything that you need to be successful with the software, I just gave it to you. The only thing that Nexgen will not provide you is experience. The only thing Nexgen will not provide you is repetition. And the only thing that I can't give you is the motivation to study. But if you do that, if you follow the path, guys, you have everything that you need to be successful. And then, yeah, Trading Books, make sure that you show me that picture. Because I don't like to argue, but I'm pretty good at clearing up misconceptions. Is anyone going to show me this trade? Termination, reversal, odds favorable, and it pulls right back to the midband inside of triggers, and it goes all the way to Fibonacci support. What do you guys think? Anybody catch that one? Hit you but didn't fill? Right on. That happens sometimes. Chat. That's okay. Remember, these mid bands come down as price comes up, so you're going to want to make sure that your entry is a couple ticks below it, Morgan. 2 to 3 ticks on mid band, because it will come down the whole time price is coming up. And if you're right on it, you run the risk of missing it. A little nuance. So guys, that's my first hour. First hour is the same hour. Every day. Same thing every day. Momentum, clear path, and entry. And then the second 2 hours, guys, we're going to start clicking on all the pictures that you posted. We're going to talk about the 3 advantages. We're going to look at your entries, your exits. And the only thing that I ask you guys is if you post in the room, tell me what you saw. Tell me what your chart read was. And this is an open invitation to everybody too. For you guys that are taking trades outside of the high probability trend trade. For you guys that are looking for other trades, post them in the room. I'm pretty good with this stuff. I can help you. And then can everybody give me a why before I disappear? That divergence on a 50-50 just killed it. Divergence on a 50-50 just ruined your trade. There's a reason that's in the KISS plan, guys. There's a reason that divergence is one of the most identifiable factors in trades, in that trade that loses. So I'm going to disappear for about 5 minutes. When I come back, we're going to start All right, cool kids. Let's do some chart reads. And I'm going to tell you right now, I'm going to need you guys to work me a little bit today because there's not a ton of pictures posted in the room. So I'm kind of hopeful that you guys are like, hey, Mark, here's a lesson I'd like. All right, Cheetah got us going. And I'll tell you what, Cheetah, I saw this one this morning and I was totally stoked on it. I was so happy to see this. The market reverses off the 1-to-1s. The momentum is great. It has the potential to break. And you get in just above the 1-to-1s inside of triggers. And man, what a great looking trade. It's a 50-50. It's not a clear path yet. Not quite a clear path. And that would be the only thing. And guys, sometimes I'm going to point these out, not because, oh, shame on you, you said clear path and it wasn't. But those large triggers haven't quite broken through, which means that this isn't a clear path yet, which means that it's only the potential to break. But without divergence, you take the perfect entry. And I'll tell you what, your targets are optimistic. Cheetah, are you with me in here? Because there's one thing that I do want to talk about with this one. Hey, good morning, Zorro. And let me take a picture of it. And I want to show you guys something cool. Someone over in Traders Chat asked, man, how do you avoid those drawdowns? How do you quit getting those drawdowns? And when price reaches this line, decisions might be made. When price reaches that divergence high, guys, that line has the potential to stop the market. That line has the potential to reverse the market. That line has the potential to create a reaction that could just absolutely ruin your day. So one of the things, if you're in those prop firms, guys, is get paid. And this is literally, oh my gosh, 32 ticks away. 320, well, it's 160 on the RTY. No, that's gold. That's over $300 worth of profit to get up there. Another thing that I notice on this, and I want to talk about this today, guys, I want to go through every picture, is you've already gotten your reversal bar. It's already doing everything that you want it to do, and you could have less than 10 ticks of risk on that one. But instead of having $90, you have $240 per contract. Guys, remember that the whole idea is to get paid. And the whole idea is that you are so stinking good at pinpointing entries that it's okay to reduce risk. There's no reason to risk giving up $500 when it's already told you everything's doing what it's supposed to do. And man, these lines are great places to get paid. When we talk about chart reading, one of the things that you guys are told is that you're going to understand where the market is likely to go. And man, that is definitely one of the places where the market is likely to go. Can you guys hear me? Does that lesson make sense? Your software gives you so much precision that you don't have to hope and you don't have to wish and you don't have to pray. You just have to follow a couple rules and work the system, guys. Take advantage of it. You're good at this. All right, Andy. I really liked this picture when I saw it, guys. Odds favorable. Everything says up. Andy's looking for an entry. And the first one doesn't get him. The first one didn't get him. And guys, this is where it's not uncommon to see y'all jump in up here, only to have the market come right back to the perfect rules-based entry. And sure enough, it goes right up to resistance, guys. And this is one of those things where adherence to rules, areas inside of favorable large triggers, pays huge dividends. Because if you jump in at the top, you don't want to keep your stop all the way down here. You're like, oh, that's too much risk. So, Andy, great picture. You weren't in front of it, but that's all right. And then here, termination. And he doesn't just arbitrarily go long. He gets 3 divergences. The triggers roll. And the short doesn't work against 3 divergences into a termination condition. You didn't think that I'd see that loser, but I did. And he goes, wait a minute, this is an area that may stop the market, may reverse the market. Let me get those 3 divergences. Let me get my small chart rolling. Let me get that momentum in the direction. And Andy knows that as long as he's left to these triggers, he's going to get paid. Andy, this is such an awesome trade. But I did see your loser before. And then here, everything is going up. The market's trending. The path is clear. And you get in at the high point. And guys, here's a good lesson for you guys. When the market is odds favorable, and this is a key part of it, when the market is odds favorable, we get in at that highest point of support, because with that much momentum, we don't expect him to be able to push back that far. But guys, when you're weakening, always be prepared for a lower point. I'm not saying don't take the higher point, but what I am saying is you have to be prepared for the lower point. Andy was. He put his stop where the market shouldn't go, and he was able to capitalize on this trade. And then with those anything can happen triggers, he lets the divergence take him out. And Andy, you're just putting on a clinic, and I don't even know if you're in here, but absolutely crushing it today. 50-50, no divergence, perfect entry, getting paid. Absolutely beautiful, Andy, once again. Trading with momentum, trading with direction, trading from areas. And then your loser was directly into a termination condition. Guys, you've got to take some of these every now and then. And I know that people like to hide losers. I don't want to show Mark this loser. I traded into a termination condition. I don't want to show Mark this loser. I didn't have momentum. Guys, show it to me. Because what this tells me, and I want you to see exactly what happened here. There was a termination condition. Does everybody see it? Rule number 1 not met? Does anybody see it? Okay, thank you, Cindy. Rule number 3 says areas inside of triggers. Do you see how rule number 3 wasn't met as well? And guys, this is where rules are designed to save your bacon. These rules are designed to keep you from just giving away money that you shouldn't be giving away. And I'm going to make this right here. And guys, I'm going to encourage you all to do this, to take this picture and print it out. Take this picture and print it out. I'll give it to you right now in the room if you don't already have it. And take 3 pieces of paper. I'll use my call out box, but take 3 pieces of paper. And every time you think it's time to take a trade, take your call out box or your piece of paper and say, do I have momentum? Out loud, scare the dog. And if the answer is yes, leave it open. Do I have a clear path? If the answer is yes, leave it open. Andy would have had to cover that one up. He did not have a clear path. And then finally ask yourself, do I have an area inside of favorable large triggers? And once again, Andy would have had to cover up entry area, which means that visually, before he pulls the trigger, he has already told himself that he's given up 66% of his advantages. He's already told himself that this isn't a trade that's likely to win more than it is to lose. And he's made it very clear to himself that his advantages are going away. And guys, if you go through this process, whether it's with this little, print it out and do it with paper, or if you begin speaking to yourself every time, do I have them, do I have them, and insisting on them, what happens is you're more likely to stop taking these, man, I sure hope it goes down trades. You're more likely to not take the trades where the advantages aren't present if you're always talking to yourself in terms of advantages. So, and then once the termination rolls everything, he's like, wait a minute, I went the wrong way. Let me go with momentum. Let me go from the termination condition. And sure enough, he gets paid pretty easy. So great stuff from Andy this morning. And then trading book. Strong triggers, So how many divergences do you see here, Trading Book? The first one takes you right back to your perfect entry. Your second divergence takes you right back to a perfect entry. Your third divergence takes you right beyond everything, right beyond the perfect entry. Do you see how the divergences, 3 divergences said, hey, we may push up higher? That's where this happened, to the wrong side of the correction point. This is the termination condition that I teach every morning on the small chart. No, you have to manage out of it. But if you get in right here, I can't see your prices. I can almost guarantee you made $300, exited the trade. It has been all week, Cindy. So how do you manage it, Trading Book? Do you remember? It wasn't that long ago. No, don't avoid it. Hell, make some money. Start practicing this right here. Start practicing getting paid. And eventually you'll change your plan. But with this look on the large chart, there's absolutely no reason to not take this trade. With this look on the large chart, there's absolutely no reason to not take this trade. But with this look on the small, I just told you, use the KISS plan initially. Get paid at 100 and 200. Go break even after you get paid the first time. That's the easiest way to do it, and then you'll develop a plan. Well, your initial stop goes where the market shouldn't. Once you get a reversal bar, your new stop is 2 ticks above it. Once you hit $100, your new stop is break even. And then once you hit $200, you're out of there. That's it. You're done. And then if it comes back to a mid-band inside of triggers with this look, hell, you're back in. You're double dipping. But that takes a while. Man, it takes a while to get good at that. So if you keep it super mechanical, this tells you exactly where to put your stop. This tells you exactly where to put your targets. This tells you exactly how to manage your trade with zero emotion. And this is why we use Simulator Trading Book, because management's freaking terrifying in the beginning. So if you keep it just as mechanical as your entries, what you find is that you're in a position where you can make an awful lot of money with absolutely no stress. So practice this management as much as you practice your entries, and then what you'll find over time is that you'll begin to learn when it's appropriate to hold for those bigger moves. You'll begin to recognize looks and patterns when you know that you can hold for those bigger moves because of odds favorable, because of a clear path. And what it does is it keeps you very, very mechanical until you get the ability to manage your trades through practice, through simulation, through class feedback, through continuous study. Does that make sense? So here's the other one that I gave you guys. If you're in a high probability trend trade, initially you're just using the KISS plan rules, right? And then you may incorporate a second higher lower divergence. You might incorporate divergence from a 1-to-1, large chart areas, 3 divergences in the same range. So your management plan is going to expand as you expand, but until you have the ability to see it at a moment's notice, that's your best of the best. I promised you everything you need to be successful. So the KISS plan, strong top or bottom, there's your pictures, strong triggers, terminations, entries, your initial stop, your first stop movement. The KISS plan has every picture that you need that corresponds with the rules in the movement. Ta-da! Everything you need, promise you. All you have to do is learn it, is take a little time, practice it, commit it to memory. And that's going to take a little bit. Give yourself a little bit of grace. You're brand new. I have gone to great lengths to make sure that I keep absolutely nothing from you guys, that I give you anything and everything that you could ever need to be successful with the software. And you have my promise that you will get feedback on every picture that you post in the room. And then Ron, and guys, this is what inspired me to let you guys know that once you can identify momentum and a clear path, you have everything you need for a successful plan. Momentum and a clear path, and Ron gets in and gets out. Boogity boogity. 11 ticks, $110 per contract, guys. That's it. That's all it is. Do that 5 times a day. You're adding $125,000 to your revenue. Learn the most basic approach to chart reading. Keep it as mechanical as possible, guys, and the sky is the limit. 100%. The sky is the limit. But you've got to learn the easy stuff first. You've got to keep it mechanical first. You've got to be able to identify a couple key concepts so that you can take advantage of momentum and a clear path and ride that wave and get paid. And that's all you're doing, guys. And then Pete, odds favorable, clear path. You're trusting a mid-band outside of favorable large triggers, right? Because of the look on the large chart, you're willing to take a shot on a mid-band, and you probably had a predetermined risk. I'll let it get X number of ticks beyond this mid-band before I jump ship. Because you don't have trigger lines to protect yourself. You're on the wrong side of it, right? But with this look on the large chart, Pete says, shit, I got to go down. And he does, and he rides that momentum all the way down. All the way down to that key area. Great trade, Pete. I was digging that one yesterday too when you showed it. Great stuff. Just a little bit of repetition. You'll be floored at what you can pull off, guys. Just a little bit of understanding. Everything says up from a termination. Why on earth did you go short? You took 2 short, you went short again, and got stopped out of all of them. You guys remember when I said don't fight large chart momentum? So Pete, why on earth did you go short, brother? Coming from a termination with the best momentum ever, and you even doubled up on your position. That's the easiest way to drain accounts. And then he said, whoop, wrong direction. Let me get back in and get it back. Let me go with momentum. Let me go with the clear path. And there he goes. And guys, you're going to make mistakes like this. Oh no, that was definitely a sell. That was definitely a sell. A pink arrow on the left side, entry. Was that an exit? Was that an exit from an earlier entry? Because there's where you got stopped out of them right there. And that's where you re-entered. This chart says that you entered at 55, you entered at 60, and you got stopped out of both somewhere around 72. Exit from a previous trade. Okay. Gotcha. That makes much more sense. Everything says up. Areas floating in the middle of nowhere, right? And sure enough, it closes back to those other triggers. With this look, you're willing to hold. And sure enough, you get out at the line. and you take your first couple trades in sim to get warmed up. I like that. Just get accustomed to the flow of the market. That's kind of cool. Everything says down, 50-50, no divergence, perfect entry. You get paid, but everything still says down, and you take it out down here. Absolutely beautiful. $600 base hit. Absolutely perfect, Pete. Everything says down. You take it per the KISS plan. Awesome. Ron, have a great weekend, man. And then getting out at lines. Guys, it's hard not to get paid when you're following the basic rules. It's hard for the market to go up when everything says down, so you might as well just go down with the market. All right, let's see who's next. It's been the Pete Show for a minute. You've been putting on a clinic, though. I like it. Did we see this one yet? Everything says up. You trade directly into a termination condition. So one of the things about these trades, Pete, man, have room to your target, right? You didn't have any room from that place that had the potential to create a bounce, but you do have the ability to understand that with all that momentum, it's probably still going to go retest it. The jump-in trade, it has a place. It has a place. I don't think that's it. And it's more effective with a little bit of running room. Still great trading. But you have the ability to understand that with this look, even into a termination and no divergence, it's likely to retest, and you took advantage of it. So there's some next level experience being exposed there. The kind of stuff that you don't have on day one, but rather you get 30, 60, 90 days in. John says this is a trend trade, but it's really not. It's directly into every termination known to man, right? That's a tough trade. So guys, one of the things is when you see John Novak trading in the room, understand that he has reasons for trading into these areas. And then coming back here, this is beautiful. This is just a momentum trade that he's looking to go down. But I encourage new users, don't try to do what John Novak does. He's got you by 27 years worth of chart reading. The rules were met, but you weren't feeling it. 50-50 trade, split triggers, and sure enough, it ran up. Don't mind losers in sim. So Pete, I think that the one thing on this, and I was talking to somebody yesterday about it, is when your triggers are this split and your areas are floating in between, one of the things that I love, and this is just me, is wait for that reversal bar to get you in. Because there's too much indecision, right? There's two correction points. I love waiting for that reversal bar. For me personally, it's worth the price of confirmation. And if it never happens, then I don't get stuck out. I know you do, but these are the things that I feel compelled to say out loud for everyone else in the room that may be struggling with that. If it's not perfect, it's okay to insist on a little confirmation. You guys are too good at this. And this is a 50-50, and that was the gap theory. And sure enough, it closes the gap. You're in early, but you ride the gap, and then you get down to the divergences on the 50-50. Nice job, Pete. Trading book and pencil. Let's see what we have. Dun, dun, dun. Odds favorable, clear path. Pull back to support. Why'd you get stopped out? Yeah, and Pete, I encourage people, guys, give a shit in sim. because you're creating muscle memory. You really are. Where was your third divergence? I see one. I see one divergence, and then I see the perfect entry, and then nothing changed. The only thing that changed in this trade is everything started going up. That's okay. You're okay. But these are the things where you have to go back. Why did I exit, right? Why did I move my stop arbitrarily? And that's okay, because now you've got that KISS plan. So now you can at least have a reason to move your stops. You can at least have a reason to adjust your targets. And I think that's going to pay dividends. Guys, keep it super simple in the beginning. It's going to change your life. It's going to create an enormous amount of confidence. D, everything says up. You're in at the mid band. Odds favorable momentum, and you go through Y. Clear path, weak bottom, perfect entry. Got nervous and got out because of one-to-ones and thought another divergence was forming. Need help in understanding how to confirm for better exit. So D, did you see that negative number flashing? Cool. So let me show you something. So this negative number right here, D, this is potential. That's all it is anytime this is flashing. I've picked my wife up. I've taken her to dinner. We danced a little bit, we saw a movie, and I walked her to the doorstep, right? And that potential for a good night kiss is there, D. And that's what this flashing is. It's just potential. But until my lips touch hers, it's just potential. If she goes, not so much, then it never happened, and I can't start bragging yet. And what you'll find a lot is you may see this potential for 75 bars in a strong trending market. That potential might be there all day long. So don't let it freak you out. Don't let potential be a reason to exit. Force it to print. Force that magenta line. Force that negative number to print solid. And if you do that, it'll keep you from getting faked out. And then you do a beautiful job of re-entry and make those quick profits. Does that make sense? Potential is hard. My brother told me once, I was like, oh, John, there was divergence potential. I'm telling you guys, I've done everything that you've ever done. So, and he goes, dude, Mark, a plane might potentially crash through your roof and kill you today. He's like, but you're not going to make your daily decisions based on that potential, right? Let it happen. And then at that point, it won't matter. It's a little dark. Yeah, it's the Novak thing. But that's kind of what it is potential is awesome. Understanding that the potential is there is great. It might help you with managing it. But make it print. Force it to print. Don't make a decision on that potential, but be prepared if you see it, I guess is the best way to put it. And then P, just to show divergence spoils the party on a 50-50. Divergence from one-to-ones, and it blows right through, right? I like that. Sometimes taking pictures of rules not being met is just as valuable as taking pictures of rules being met. Why stopped out? One of my favorite questions. You want the answer, Trading Book? Why did you get stopped out? Kurt Morgan is happy to see you. I am too. Whoops. It's okay. It doesn't matter if it's old or not. Let's talk about it though. Guys, look at this trade. Strong triggers, clear path, lowest point of resistance inside of favorable large triggers. Why did it get stopped out? You want to know why, everybody? Because some jerk with more money than you wanted to go up higher. That's it. That's the only reason. You're not in control of whether or not it wins. You're only in control of whether or not your rules are met. And the cool thing is that this is a pattern that wins 70 to 80% of the time. So when you follow rules, do it all correct, and you lose, it's normal. Anything that wins 70 to 80% has to lose 20 to 30%. It's just math, right? It's just math. But I like it when people ask that one, what stopped me out? The market stopped you out. It just didn't work, and that's all it was. But you did such a great job following your rules. These are the ones where eventually you're not going to be upset that they stopped you out. You're going to say to yourself, man, everything was right, it just didn't work. And then Pete, trying to get that one to open. And it doesn't seem to want to. Let me close everything and come back to it, and we'll see what happens. There it is. Weak bottom, but room to get back to trouble. So you take a shot at it, and sure enough, get out of trouble. Nice job. Great trade, Pete. Jeremy P. Odds favorable, clear path, perfect entry, and it just didn't work. And man, Jeremy, this is the gods just asking you if you really trust your plan. That's perfect. Everything about this is 100% spot on, and they're testing you this morning. They know that you needed that test this morning. GWC, let's see what you did. GWC says, termination, everything rolls. I'm going to hop on in, and if it loses momentum, well, it's coming right back to a mid-band inside of favorable large triggers. I'm going to write it down here. I think this is beautiful. Guys, this is understanding patterns, that when this just jump in trade fails, with this look, it's likely just to become a trend trade. And sure enough, that's exactly what it did. And he knew that with this look, down it goes straight to support. GWC, great trade. And then Jeremy, that's a tough one, because you know that divergence low is there, right? And it looks like it stops printing eventually. It's a great look on the large chart. Yeah, it didn't, because the large triggers didn't get below it. Until the large triggers are below, it's not a clear path. So it was really a 50-50 with two divergences at that point. And it didn't work out. And this is one of the things. So the software, see how it keeps it printing? I think the software might stop that printing process maybe when price gets below or something. But until the large triggers clear it, I'm keeping that in play. I'm keeping that it takes the small and the large to get through for me to consider it a clear path. And then Trading Book, we saw that one. And then Muser. When everything says down, the path is clear, Let's get in and get out. Beautiful. Absolutely gorgeous trade, Muser. And then Miss Cindy, not a termination on crude, but you've got everything up, that immediate momentum. You've got room to trouble. You get in right at support, right at the large triggers, which is the pullback to the small. And then just curious, Cindy, why not get paid at that big red line? Hey guys, I'm telling you right now, this is one of the biggest reasons people blow out these prop firm accounts. You had a giant line at 78 and you gave back $160, which is an extra $160 in your drawdown. You still made money, but you made $110 instead of making over $200 per contract. Guys, it's okay to get paid at lines. You're so good at this. You're gonna find the next trade. I promise you, you're gonna find the next trade. Strong triggers, momentum, clear path. You get in right at the one-to-ones inside of the triggers. There you go, holding a little longer. I like it. How to exit on second target. Where's the best place? So, trading book, if two divergences is an exit for you, you'll know on the third bar that divergence is true. Because honestly, that mid-band represents an entry for a potential high probability trend trade. So, it's all right to get paid. And I don't know if it went up from there or not. But if you were using the KISS plan, just for a little form of reference, your $300 was guaranteed. And that's all you have to do a couple times, right? All you have to do a couple times is make that $300. Call it a day. NT was not having it this morning. Took so long to take this pick because it crashed and took forever to load. Sorry. 50-50. Perfect entry. Out of trouble. The divergence was not here when you took the trade. But then before you took the pick, NinjaTrader crashed. And when the data refreshed, you had the divergence, Morgan. That happens sometimes. It's a weird little data thing. Still, great entries create manageable trades, right? Great entries create manageable trades. I love it. Nice job, Morgan. And then that's the same one. And again, not third divergence, trading book. Do you see it? You've only got two. You've only got two divergences. You don't have three divergences yet. Am I missing something that you see that I don't? Or did you repost the wrong one? All right, Kurt. Woo! 3 trigger lines broke support. Was the double divergence on the small chart the reason you got stopped out? That's okay, trading, but we'll get it. So, Kurt, are you with me, man? Cool. So one of the things that I encourage people that are new to posting in the room, and I haven't seen anything from you yet, so this is why I'm going to say this. One thing is you need to click F5 on your small chart to fix these weird triggers. But I say every time you go back, let's talk about the three rules, right? So let's talk about odds favorable momentum. And that is a resounding yes on your chart. You've got the best trigger look ever. Does that make sense? So rule number 1 is met. The second thing I tell you guys to identify is your path. So is it clear? Is it a term? Is it a 50-50? Because this is going to give you a lot of information on what you're looking for entry. And for you on this one, I don't have anything in my arsenal where I reference 3 trigger lines breaking an area. If the smalls break through and the large don't, and these work together, so 2 lines is a small trigger, 2 lines is a large trigger. So what you have here, Kurt, is one of those 50-50 looks. One of those, it has the potential to break because of the momentum, but this area isn't broken until the large triggers, both lines of the large triggers get below. Does that make sense? So we're working without a clear path. And one of the biggest killers of that 50-50 look is divergence. And when you have one, sometimes there's still an opportunity to make money. Especially when you're coming from a strong top like this, one divergence, I'm very willing to take that trade. 2 divergences for me is a 100% no-fly zone. 2 divergences takes away so much momentum on an area that isn't broken, you're going to find yourself stopped out more often than not. So that second divergence printing was absolutely a deal breaker. And you would have known about it about right there. And this is one of those things, when the potential is present, you might wait to see, well, if divergence is true, I don't take the entry. But if it's not true, yeah, I'll take a shot at it. And divergence could have kept you out of this trade. Avoidable losses. And when you look at the KISS plan, referencing divergence is one of the biggest killers of the 50-50 trade. Great picture. Does that all make sense? You're welcome. Momentum, clear path, perfect entry, 20 and 30 ticks. How easy is that? That's a $500 trade. Trading book. And the large chart never blinked. Beautiful. Absolutely beautiful. And then Pineski, I saw you redo. Thank you for that. Odds favorable. He has room to trouble. Trying the momentum style, understanding that if momentum fails, it's likely to become a trend trade. And getting paid. Nicely done, Paul. And you say, this is the one finally. So are we talking about the 3 divergences? Is that what you mean by this one finally? Pretty cool lesson here. Trading book, is that where you were going with this one? One divergence, 2 divergence, 3 divergence, 4 divergence, and you're like, dude, that's so many divergences. So the one lesson that you may not have gotten yet, and I'm assuming that you're listening, is that divergences, no worries, we're okay, dude. We are so good. Don't even sweat it. Divergences are like areas. So if I extend that divergence line all the way out to infinity, right? I'll make it cyan so that it matches. Once my small and large triggers get below that divergence line, I'm taking it out of the equation and I'm starting my count over. And then once the small and large get below this divergence line, I'm taking it out of the equation and I'm starting the count over. You're making up rules. You're making up rules. You can do whatever you want. That's the beauty of it. Is you can do whatever you want. But what I teach is that once the small and large get below this line doesn't matter anymore. So this is your first divergence. It's not your second. And then once your small and large get below that, this is your first divergence. And since the small and large don't get below, that's your second divergence. So on this trade right here, by the rules of broken areas, it's exactly like the rules of termination conditions. This is not in play anymore. This is not in play anymore. So you've got two divergences, and it pushes you right to the perfect entry, and down it goes. So when we talk about three in the same price range, we're talking about that idea. If we got a third divergence right here, now we have that three in the same price range. Best stop loss above third divergence. How about exit when third divergence is true? Is that easier to follow? Because then it doesn't require anything other than you mashing the close button if the third divergence is true. Because that becomes an exit condition. Pretty awesome, right? And you're going to grow your exit conditions, right? Divergence from a 1-to-1 might be an exit condition. Reaching a line on the large chart might be an exit condition. But initially, make your $300 and then continue watching the trade. And you'll begin to develop a management plan. Great picture. And that's a good lesson for everybody, I think. Divergences are the exact same as areas. And guys, that was the thing where the same reason this behaves as a 50-50. And once the small and large get below it, we consider it broken on the large chart too. We're going to use that same concept. So great stuff. I like it. Man, we made it through all of our pictures. Is it all kind of clicking and coming together? And the thing is, in the beginning, guys, it's a whirlwind, right? In the beginning, it's taking all these individual concepts and trying not to mess them up and try to make sure that we're practicing them correctly. And guys, this is what we're doing in the beginning. Like, this is everybody in the room. This was me for sure. There's all this information coming at you in the beginning. But the cool thing is once you start, I guess, believing that the most important things that you could ever learn is identify momentum in a clear path, and then everything else starts to work itself out. And then, guys, John put 6 pictures that I can't see yet in there. So I'm going to take 5 minutes. I'm going to take a second break there. They just came up. Look at John's trades, and if you have any questions about them, I'm sure he'd love to answer them for you. I'll be back in 5 minutes, and we'll get into that final hour, and Pete, we'll get you when I come back. All right, guys, let's get back into that last hour. And man, I love it when John shows up. He's got all the answers. I've got most of the answers. He's got all the answers. And it's pretty cool that he is so accessible to you guys. It's not every day that the CEO shows up. And is that helpful? All right, Pete, great looking chart, strong triggers, everything's up, clear path. I don't know that everything was up. Oh, you got stopped out of your previous short. There we go. And then you got in above. And just no reason to exit, right? And you hit your profit in a new prop account. Nicely done, Pete. Great trading, dude. You have found your groove so much. Nice stuff. Good stuff. And then John and trading, going to town on it there. The cool thing is everything that we teach works on all of these time frames. It's just easier to read trading when it's slower like that. The NASDAQ moves so fast that you almost have to slow it down to be able to recognize your rules being met. I've looked at it on a 13.251 and it's like lightning. It is so fast. There are. You don't have to catch them all. That's the beauty of it. You only have to catch some, not all. Have you guys seen this? I know that you have. I drop it in here all the time. One of the things that people tend to not do is define their daily goals, right? What do you need to replace your income? That's usually the way people look at it first, right? How much do I need to make a day to replace my income? And, you know, my friend Christine in the room said, you need $200 a day to replace your income as a school teacher in Florida. $200 a day, that's it, right? And then some of you are like, well, I make more than that. You might need $500 a day, and you might need $900 a day, or whatever it may be. And the cool thing is, it's without a doubt trading, and it would be. And what you'll find is when you start taking the best trades, and most importantly, guys, when you stop giving money to the market when your rules aren't met, when you stop fighting, but rather you start taking trades that have been proven to win more than they lose, and you find that consistency, it's not difficult to find $1,000 a day. And there's people that trade Nexgen that make $1,000 a day, and they mirror 20 accounts, and they're making $20,000 a day plus on that $1,000 a day, guys. And that's one of the things that trade copiers allow you to do. Get really good at capturing your goals, right? Because if you make $100 a day and you can make that guaranteed every day, right? You're like, there is no way I can't make $100 a day. Put it on 20 copiers, and now you're making $2,000 a day. Now you're making $500,000 a year. And that's the thing, is you don't have to catch every move. The futures markets trade billions of dollars. Billions of dollars. You don't have to catch all of them. Billions of dollars daily. So, pretty cool. And then John trades a 4-lot, $800 a day, right? The Sky Trade Station has Sky limit contracts. Okay. What is your limit on contracts? Like 30? How many contracts can you go up to on Trade Station? There you go. There's John's management plan. Oh, told you unlimited? The only thing, the challenge you're going to have is getting fills on all of them. Even on Simulator, if you put 100 contracts in, you're going to see them get filled over the course of 7 or 8 points sometimes. That's the only challenge. So if you're looking for small moves, that becomes difficult. If you're looking for the bigger moves, then it makes sense, guys. Here's that gap theory, ladies and gentlemen. Price reached Fibonacci support. And when it reached Fibonacci support, the large triggers were a full bar away, which told all of you no trades from this midband right here at triggers. It's likely to close the gap. I hope that's what it told you. Guys, what do you want to talk about? We've got no pictures and an hour to kill. What do you think? You took a quick long here, Pete? Because of the gap theory? Because of the pattern you recognized? Telling you guys, once you learn these patterns, the sky's the limit. Once you learn these patterns, you will be absolutely floored at what you can pull off. Termination that reversed the market on the S&P. Let's see, there's your first tail. There's your second tail. There's your third and fourth tails. There's your fifth tail. There's one going the other direction. Should we see what the tails look like? Resistance inside of triggers, resistance inside of triggers, right off the mid-band, in between triggers, a little bit up, and then right off support. Kind of crazy. And then we start getting into all those divergences. So trading book, we can let those divergences break a little bit. And then John's watching golf and day trading. I like that you threw that in there. John says, I'm coming off of that termination and things are looking down, but I've got all these divergences. Let me see if I can use a pivot stop out and capture some funds. Absolutely. And the cool thing is, trading book, is we're going to keep learning them every day. Every day we're going to get a little bit better, and every day you're going to get a little bit closer, and every day your things are going to jump out at you. And it's crazy how that works. I see things now that even a year ago I would have never seen. I would have never comprehended. And it's just this constant state of learning. And the more effort you put into learning these patterns, and really the easier you make it on yourself by having very simple rules, guys, the easier it becomes. And guys, John will come in here and share everything that he knows. I'll give you guys everything that I know. Every time. You just got to learn it. Waited for the triggers to break the mid-band, took your trade, took $100. Nice job, Jeremy. Jeremy's working on that plan of getting paid, right? Get in, get paid. Get in, get paid. And those trades will get bigger, Jeremy. Those trades will get bigger. But for now, just keep pumping money into that account. Take those great trades, right? Stick to that KISS plan. You know, it's pretty awesome. One of the things that you always hear is buy low and sell high, right? You guys knew exactly where high was likely to be today. You could identify low, and guys, we're just looking for opportunities in between, and it's pretty outstanding that you know, when your salesperson first called you, Mark Dean sent me a question and he goes, why don't you, in that What I Teach thing, reference fib reading? And I was like, well, I do when we talk about terminations, right? I do when we talk about clear path. And guys, what's cool is it's these key Fibonacci indicators or areas. It's these automated fib levels, and then a simple plan how to use them. And that's what we do every day. And John, when you have odds favorable momentum, when the path is clear, you can take that entry, right, with confidence, and they don't all work. But it fit the rules. He took the trade, and it just didn't work. And once again, I said it yesterday, I'll say it again today, guys. Even the CEO of the company, the guy that wrote the software, the guy with the Encyclopedia Britannica of knowledge, still takes high probability trend trades because they work. Still focuses on momentum in a clear path because it works. Still uses area for entry because it works. And he went Joe Dirt on it when it didn't work. Dang. You have to be willing to lose. What do you guys want to talk about? Bullets are part of the trading. Sun Tzu said that you have to put yourself in the kill zone to be successful in war. Josh took the exact same trade. He's in at 42.75. He gets paid on the way up and break even on the way down. Able to still make money, Josh, on a trade that failed. That's pretty awesome. That's pretty awesome. And John says he forced it below those triggers before he was willing to exit with that look on the large chart. He made a choice, right? He could have lost 3 ticks. That one didn't fill you when you tried to get in? But it went, right? So if you were in at 42.75, it made it to 44.75. It would have made your $100, Jeremy. How awesome is that? And one of the patterns that you see on this, guys, is when it comes from a bad bottom, that mid band has the potential to hold now and then. And it pushes all the way back to support with all of the triggers up. That's an old one. Comes up, and now we're rolling over. Odds favorable. But from a bad bottom, that's it. So, Kenan, one of the things with the funding company is it's not going to be used on NinjaTrader. So John Novak and I have been working diligently with TradingView. And he has written indicators to give you one-to-ones. Man, have a great weekend, Trading Book. Thanks for being here this week. Trigger lines, one-to-ones. And we've actually come up with and written a plan to be able to capitalize using TradingView as well. And it just revolves around momentum, and it revolves around areas, and it uses these MACDs a little bit. So yeah, TradingView is going to be one of the options. And then the browser, which is going to be basically exactly like NinjaTrader. Everything that you guys are accustomed to will be one of the options as well. TradingView is pretty cool. I don't know, Josh. That would be a John Novak question. Gary, this is so stinking hard to read. You take an HVA short, but I don't know where you took it. $76. So Gary, I don't understand your trade. Because there's a lot of down here that I don't see on either of these charts. Yeah, NinjaTrader 8's not going anywhere, Josh. You won't be able to use it for the funding company. But NinjaTrader 8's not going anywhere. You'll have to stay on Ninja for Apex. Thanks, John. 3 divergences. Three divergences in the same price range may terminate the trend. That's a pretty cool rule. Guys, you've got John Novak in here if you have questions like that. Don't want to have them all for nothing? I like it. This is a great opportunity to ask John Novak questions since nobody's posting trades. It sure did, didn't it? Oh, John, you had a fib. Large above will not be a short. 3 divergences. John says, man, I can go up from this. I guess when you're the owner of the company, you get extra fibs. Why didn't that print on your large chart, though, John? Oh, you plotted your 8 range fib. I got you. Little different rules, right? A little different look, a little different level of experience. I love it. Guys, it's okay to watch what other people do. Whoops. And we're about to die here on NinjaTrader. We just blacked out. It's pretty cool to see what other people are doing. And it doesn't mean that you have to do what they do. But you certainly have the opportunity to learn from everything presented in the room, whether it's John Novak's, whoever it is. The gobbledygook overhead. I don't know what that means. One and done. Resistance. Which resistance are you looking at, Kurt? Show me a picture. Did John have resistance overhead? He's got, over here there's nothing at all on his large chart. He's just got triggers in the way. 1-to-1s. They're just small chart 1-to-1s. Termination conditions happen on the large chart unless we start getting those multiple divergences and stuff. No, it's okay. And guys, I'm not going to lie, sometimes I can't explain to you what he's doing. Sometimes he has reasons that even I don't understand. And I have to get with him after class and go, what the heck were you thinking? Just different ways to do things. But yeah, Kurt, he knew that this would be potentially problematic. And notice that he took half of his profits there. And this is one of the things that John Novak understands so well, is that the whole goal of trading is to get paid. And guys, not every trade has to be a home run. Not every trade has to go the distance. And if you're aware, and if you start recognizing patterns and you start factoring in advantages, you'll find that you're able to capitalize on trades that even fail. Josh did a great job of that earlier, where he said, you know what, my goal is to get paid. So I'm going to get paid. And then whatever happens next, it doesn't matter because I've got money in the bank already. And that's pretty cool when you're able to do that. I'm bringing my Ninja Trader back up. And then John's on that Friday. I'll do whatever the hell I want to do kick. Odds favorable. And he takes a little pattern from his range chart going with momentum on 3 charts and says, you know what? Virtually no risk. Let's see how much I can get out of it. And guys, this is you guys that like range charts. Confirmation of momentum goes a long way. When all 3 charts are aiming down with odds favorable momentum on all 3 charts, it's hard to stop the market. That market's probably going down. One of the reasons why fighting momentum is the recipe for financial suicide. Yep. Nice one, John Novak. Let us know how that turns out. I love the entry pictures. I like to see what happens next because I think management's a big part of what we do. He said it didn't, not good. It's over. Got crude oil loading up right now. Divergence spoiled the party again. Guys, it's Friday. Isn't it cool how you can see on the small chart the fights that you don't see on the large chart? You've got these waving red flags that tell you when it's time to cut your losses, to jump ship, to protect your position. And they're consistent, guys. They're consistent every day. So all you need to do is have your rules for entry. All you need to do is have your rules for exit and then stick to them. I just crashed again. Ninja Trader does not want to stay up for me today. Actually, it's been great all day long with multiple workspaces. So I'm going to try again here. See if I can't get things going. Guys, if there's a topic that you want to talk about, man, drop it in the room. Let's talk about it. Otherwise, I'm going to have that really awkward radio silence, and we're just going to stare at each other for 30 minutes until I shut it down. And since we seem to have gotten to that point, I'm going to go ahead and kill YouTube.